Hello everyone, I'm Ranjitha B.R. In this video, we are going to learn how to pass the journal entries and post them to the ledger. So I have taken now question. The question goes like this. On 1st April 2018, Mohit started business with a capital of rupees 50,000. He made the following transaction. On April 3rd, he purchased goods from Rita on credit for 20,000. On April 4th, cash paid to Rita rupees 10,000. On April 6th, goods sold to Rohit 25,000. On April 8th, received cash from Rohit rupees 20,000. On April 12th, goods purchased from Rita rupees 12,000. On April 18th, cash paid to Rita rupees 20,000. On April 25th, goods sold to Rohit rupees 10,000. On April 30th, received cash from Rohit rupees 6,000. You are required to journalize the above transaction and show the respective ledger accounts. So this is the problem. While passing journal entries in the journal, the following steps are to be involved. First, we have to ascertain the two accounts involved in the transaction. For each transaction, we have to identify the two accounts. Then we have to ascertain the nature or the type of the accounts involved, whether it is a real, nominal, or personal. And thirdly, we should apply the relevant rules of debit and credit. Which account is to be debited and which account is to be credited. And finally, we have to go for the passing the entries in the journal. First, we will take up the first transaction, the purchased goods from Rita on credit. Here, we have to identify the two accounts involved. Number one, purchase. Second one, Rita. So this is the credit transaction. So cash is not involved in this transaction. So purchased goods. So purchase is a real account and Rita is the another account. It is the personal. So purchase real. Real rule says debit what comes in, credit what goes out. So we have purchased goods. So goods is coming into the business. So as per the real rule, purchase account should be debited. Rita, so personal, debit the receiver, credit the giver. So Rita is giving us, so Rita account should be credited by rupees 20,000. So journal entry will be the purchase account debited to Rita account being goods purchase on credit. We are mentioning the Rita name because it is a credit purchase. Cash is not involved. So rupees 20,000 and 20,000. Before this, the one transaction we have left, that is on 1st April 2018, Mohit started business with a capital. For the business is receiving a capital. So cash is coming into the business. So who is giving? The proprietor. So cash is a real account. Debit what comes in, credit what goes out. The proprietor, personal, debit the receiver, credit the giver. So proprietor is giving the business capital. So real and personal. So cash is coming into the business. As per the rule, real account, cash account has to be debited and the uh, proprietor is giving us the capital, debit the receiver, credit the giver. So credit is capital account, cash account data to capital account being commence business with cash. That is the narration point. And next, we'll move on to the next transaction, that is cash paid to Rita. So two accounts involved here is cash and Rita. Cash is real, Rita is personal. Cash, debit what comes in, credit what goes out. So cash is going out of the business. Rita, debit the receiver. So Rita is receiving the money. So Rita's account has to be debited. Cash account has to be credited. So journal entry will be Rita account debited to cash account being paid to Rita rupees 10,000. Next transaction is goods sold to Rohit. So here the cash is not mentioned. So therefore it will be the credit transaction. Goods sold to Rohit. So goods is going out. So it's a sales. Rohit is another account. So Rohit personal. Sales is real. Debit what comes in. Credit what goes out. So goods is going out. So therefore it should be credited. Then debit Rohit is a person, debit the receiver and credit the giver. So Rohit account debited to debtor to sales account being goods sold to Rohit on credit on April 6th. Next, on April 8th, received cash from Rohit. So cash account and Rohit. We have to identify the two accounts involved in the transaction, cash and Rohit. Cash is real, Rohit is personal. So cash is coming in, debit what debit the receive, debit what comes in, credit what goes out. So cash is coming in, so cash account should be debited and giver is Rohit. So cash account debtor to Rohit's account rupees 20,000. Then goods purchased from Rita. Again purchase account and Rita's account. Purchase real and Rita is personal. So purchase account debtor to Rita's account and cash paid to Rita. Cash is going out. Debit what comes in, credit what goes out. Who is the receiver? It is a Rita person. Debit the receiver. So Rita's account debited to cash account, debtor to cash account. Then goods sold to Rohit. Here goods is going out, so sales account. Another account is the Rohit. Debit the receiver, credit the giver. So Rohit account debtor to sales account. Received cash from Rohit. So cash is coming, cash and Rohit. The two accounts are involved in the transaction. So debit the receiver, credit the giver. So Rohit is giving us, therefore his account is credited. Cash, debit what comes in, credit what goes out. So cash account debtor to Rohit account by rupees 6,000. That is what we mentioned in the journal entry. Cash account debtor to Rohit account. So then we have to move on to the ledger posting. The same transaction what we mentioned in the journal has to be posted into the ledger account. While posting the ledger account, we have to keep in mind some of the aspects. First, a separate account should be opened for each account found in the journal. For each account found in the journal, we have to open a ledger account. Then the name of the account should be written in the bold letter at the top and in the center of each account. The abbreviation of debit and credit should be written on the each account, on the top of the each account. Left hand side we have to write debit and right hand side we have to mention credit. The journal entries should be posted to the ledger account in the order of their dates. Chronological order we have to follow. While making an entry in any ledger account, the name of the account should not appear on either side of the account. If we are opening a cash account in the ledger, the cash account should not appear in the inside of the cash account. And every entry on the debit side of the account generally begins with the prefix to, and every entry on the credit side of the account generally begin with the prefix by. While posting to the debit side of an account, the name of the account which is credited in the journal should be written in the particular column. You have to careful in this aspect. While posting to the debit side of the account, the name of the account which is credited in the journal should be mentioned there in the debit side. While posting on the credit side of the account, the name of the account which is debited in the journal should be written in the particular column. Then page number of the journal is to be entered in the general folio column, and every ledger account should be balanced or closed periodically. So after keeping this all in the mind, we have to go for the posting to the ledger. So for every account what we mentioned in the journal, for each account we have to open a separate ledger account. So let me see the first transaction, that is cash account data to capital account. So we will open a cash account ledger account. So cash account data to capital account. Capital account is credited here. So see how the entry will be passed. So to capital account. There capital account is credited. The cash account will write it in the debit side, the opposite side. So journal, if any entries in the journal credited, it will in the ledger, it will be in the debit side. Any account is the debited in the journal, it will posted in the ledger account in the credit side. That is the opposite thing. It should be kept in mind. So to capital account on the April 1st, to capital account rupees 50,000. So then wherever the cash account mentioned, we have to go for the posting. So on April 4th, that is Rita account data to cash account. So cash account here it is credited. Rita's account here it is debited. So while ledger, Rita's account will appear in the credit side by Rita account rupees 10,000. And another account, cash account data to Rohit account. So cash account is debited, Rohit account is credited. In the ledger, it will appear in the debit side to Rohit's account rupees 20,000. And the next one, Rita's account debited to cash account. So Rita account is debited, cash account here it is credited. So Rita's account will appear in the, here it is in the debit side, here appears in the credit side by Rita's account rupees 20,000. Then cash account data to Rohit account. Rohit account is credited here in this ledger. It will be in the debit side to Rohit's account rupees 6,000. After taking all the entries in the chronological order, now we have to balance it. While balancing, the process or act of ascertaining whether a particular account has received more benefits than it has given or has given more benefit than it has received on any particular date. So that is called as balancing. The types of the balance may be debit balance or credit balance. So the procedure, how we have to balance the account is, first make the total of the two sides of an account and find out which side total is greater. Next, write the greater side total on both the sides of the account in the same line. So you are maybe observing 76,000 we have written in both the same line. Then ascertain the difference sorry, ascertain the difference between the two sides of an account and put the difference on the lesser side of the amount column by balance carried down or to balance carried down. Here, debit side total is 76,000. Here, the credit side, it is only 30,000. So, it is lesser by 46,000. So, now we are adjusting that 46,000 by balancing carried down, and both the sides total will be same. So, by balance carried down will be carried forward, brought forward for the next month. There is two balance brought down, that is rupees 46,000. So in this manner, we have to open every ledger account, whatever the account mentioned in the journal entries: capital account, purchases account, Rita's account, then Rohit's account, sales account. Like this, we have to see in the sales account by Rohit's account and the by Rohit's account 35,000. So debit side is lesser by 35,000. So it is to balance carried down, and it will be brought forward in the next month by balance brought down rupees 35,000. So this is the way we prepare the journal entry and the ledger entries. So let me move on to the next problem. Here the question is, Suresh, a Kanpur, commenced the business on the 1st January 2018, introducing capital in cash rupees 1 lakh. His other transaction during the month were as follows. That is, on January 1st, started business with cash. So business is receiving cash. That is, the proprietor is giving the cash. So cash is coming into the business. Cash and capital account we have to identify. So cash and capital. Cash is coming in. Cash is real. Debit what comes in. So cash account has to be debited. Then the who is giving the money, that is the proprietor. So personal, debit the receiver, credit the giver. So he is giving the money to the business. So his account has to be credited. So cash account debtor to capital account. Then bought goods for cash. So goods is coming into the business, that is purchase. Debit what comes in, credit what goes out, real account. So purchases account has to be debited. And the cash is a real, debit what comes in, credit what goes out. Cash is going out, so it's a credit. So purchase account debtor to cash account. Then sold goods for cash. So cash is coming in, and then the goods is going out. Debit what comes in, credit what goes out. So sales account has to be credited. Debit cash is real, comes in. So cash account debtor to sales account. Then sold goods to Shravan, Delhi. So here cash is not mentioned, therefore it is a credit transaction. So sold goods says who is the receiving? Shravan. So debit the receiver, credit the giver. So he is receiving, his account has to be debited and sales account has to be credited. Bought goods on credit from Anurag. So purchases account, we are purchasing the goods. So purchases account has to be debited. Then who is giving? Anurag. Debit the receiver, credit the giver. Here Anurag account has to be credited. Purchase account debited to Anurag account. Then goods returned to Anurag. So Anurag is here, to account involved is goods returned, that is purchase returned. Then who is receiving it? Anurag is a personal. Debit the receiver and credit the giver. So Anurag account has to be debited and the purchase return has to be credited. Anurag account debtor to purchase returns account. Then sold goods for cash. Sales and cash are involved in this transaction. Cash is coming in. So cash account debtor to sales account. Then paid electricity bill. So electricity bill is expenses. Then paid. So cash is paid. So cash is going out and electricity bill is expenses. So nominal account. Debit all the expenses and losses, credit all income and gains, debit all the expenses. So electricity bill has to be debited, expenditure, and paid. Cash is going out. Debit, there is debit what comes in, credit what goes out. Electricity bill account data to cash account. In the same manner, paid telephone bill. Telephone bill is an expenditure, so debit all the expenses. So telephone bill account data to cash account. Paid rent rupees 800. Again, the rent is an expenditure. So rent account data to cash account. Paid wages. So again, wages is an expenditure. Wages account data to cash account. So in this way, we will prepare the journal entries. So journal entries has been posted here. Wages account C, wages account data to cash account, and we have to mention in the chronological order. We have to prepare the journal entries as per the in the order of the transaction. Then we have to mention the narration of the entry, and the same thing has to be posted in the ledger account. What are all the account appears in the journal entries? For all those accounts, we have to open the separate ledger account and balance them. So by this, I will end this session of preparing the ledger and posting them to the ledger. Thank you. Thank you, one and all.